So what's going on, you filthy animals? We are here at Trade 1348. We have Anthony here. He is a recovering degenerate, and I love it. I love it. Now, I've known Anthony for a little bit over a year now, right? We've been back and forth for over a year.
Right.
We've been doing the one-on-ones and the training. He's part of the longevity club. And in that, what we do is we take his stats, we look at his performance, and then we gauge it, right? And so I want to introduce Anthony to you, and for those members in the Discord who already checked out Moto, I think you're giving Moto some competition here. This is one pretty motherfucker here, like perfect teeth,
Hey, easy there.
manicured beard, all that nonsense. So gotta fucking love it right now. No homo, like whatever, right? So let's get right to it. Anthony, what's up, man? Talk to me.
What's up, Gabe? How's everything, brother?
I mean, it's all good, man. It's all good. So, Anthony, you want to go ahead, talk a little bit about your journey, because I think that's really important before we highlight your performance as of late. So let's talk about your journey.
Yes. So trading, I've always really enjoyed trading. I kind of did it like just stocks, buying, back in the probably like 5, 6 years ago, just kind of buying the lows, when the 3 month dip happen and hopefully just ride it out. But of course, that's not really a strategy to gain wealth, right? Unless you have large amounts of capital. So I just to kind of understand, like I did know, like the principles of trading, right? I didn't know 100% of it. I just knew stocks, right? How to buy stocks, how to sell stocks. So during COVID, obviously, I had business started going south. I also got injured and I had to go undergo some surgery. So I was taken, pretty much down for the count.
Okay.
So I always kind of knew that there was people making money when, the stock market was going up or down, but I never really understood that, right? Like it was, for me, it was like, how, like, I understand the principle of buy low, sell high. So I started digging deeper. Obviously, I came across not you. You weren't the first group that I came across. Was another group.
I was just playing B. I wasn't his first. I'm
Yeah,
jealous, man.
yeah. You weren't my first. But during that's when I started to kind of learn more about like EMAs, and the group was more heavily onto options. Well, of course, I did have some capital and I went into options, but just like everybody, I'm sure that your first couple of hits is probably the dopamine that you get, and you're like, wow, this is awesome. I can do this, and you can just, you can be wealthy. Yeah, but that takes a turn for itself if you're not managing risk. So, of course, I lost over six figures in options trading. So
What
that
was your
was
risk management? So you fell into the trappings of every trader out there where it's like, I know people are making money, I am making money, and no one really understands how to manage that risk in the process of making money. So then your port just becomes as volatile as your emotions, correct? But six
absolutely.
figures, you lost six figures. Damn, dude.
Yeah.
Ouch, ouch. I'm glad I wasn't your first, dude, because yeah, I would have been
Yeah.
like, "You're my sugar daddy. You got to take care of me." What you mean you're broke? What you mean you lost six figures? Like, I want my boobies done. Anyways, go
Yeah.
ahead, man. Keep
But
going.
but as always, right? You don't let that deter you. If anything, that was a very valuable lesson for me. I take it as expensive education. You know, with
In
everything in
Harvard
life.
education.
Yeah, exactly, right. But with everything in life, right, you have to know like, okay, like action and accountability, right? Obviously, I knew that that was all on me. I'm not gonna sit here and say, yeah, that's just because I'm Hispanic of brown color, they're taking advantage of me. No, that's all on me, right? Like the computer and the trading doesn't know that who you are, right? That's all.
Mhm.
I mean, of course, they know your port size, right? But they don't know, like, like if this is.
Yeah, yeah. That trading's the ultimate equalizer. It does
Yeah,
not care about your race or religious belief, creed, whatever. It just, hey, you're in the market, right? And so it's the ultimate equalizer. And I feel like when done right,
exactly.
every man has an opportunity. So, all right, moving
So
along.
with yeah, with
Let's
that
hear more.
with that said, so I always like I said, I started digging deeper into education because I feel that that's the only way you're going to learn, right? You got to learn from your failures. So I that's when I came across, whenever your YouTube videos talking about the 1348 crossover, and then that's when at that time we're doing 1348 crossovers, and still today is a very great principle. So never it's never going to go away. But obviously, as time evolves, right, and the market changes, and everything, we have to evolve with it as well too, right? We can't be dinosaurs and be ancient. So
No.
with that, I said, look, and then at that time, how we are talking about, right, the community was all, options, but then we started, talking more about futures. And I'm like, okay, well, what the hell is futures? I've heard about, not futures, what's the other one? Forex. I've heard about Forex and like how people were like killing it and doing this and that. And I'm like, yeah, but for me to hide behind some other company because obviously I think certain forexes is not allowed in the United States. For me, it wasn't like something viable. So I'm like, I don't care how much that shiny carrot is looking good, right? It's just not something for me. So that's when I started looking more into futures, your community, and everybody kind of really wanted to push forward in futures, and we started learning that more, and so I went along with the journey, right? Since day one, been there, with you and the community learning. So, what I'm saying is that I never gave up, right? I could have easily said, hey, you know what? I tried, options was for me. I got my shirt handed to me, but we're evolving. So I need to evolve as well too. If not, then I'm just gonna be another statistic and say,
Let me stop you right there, though. So I really have to ask you, when you lost six figures in options, right? How much pressure was there on you to recoup that money? I mean, not just with futures, but coming in and saying, okay, well, I have a strategy. Now I have to recoup all my money. Did you feel those pressures when
so
you
of
got
course, right,
okay?
because that's when your emotions come in, right? And that's
Hmm.
when you may not realize it, that, if this is your first time as a trader or not, but there's a terminology called revenge trading, right? So that's where you get even more dragged into the hole, right? Because now you're pressured, you're trying to chase, right? Instead of actually putting everything to the board and say, hey, okay, I lost six figures. The market can also give me six figures, but I just have to look at it differently, right? I can't look at it from like, oh yes, I'm gonna go in all in for a home run because yes, I'm not saying, I'm not saying you can't. There's a lot of people that hit home runs and God bless them. But to me, that wasn't a viable solution because I knew that I would only fall into the trap of striking out more. Like I'm more of, I play sports, so I might bring a lot of sports analogy, but I always treat things as sports because if you look at it from a perspective, it really helps you understand that as an athlete, it takes time for you to condition yourself, right? Not every great athlete goes in and says, "Yes, I'm the best."
No.
You might be born with a bat in your hand or a ball in your foot or whatever the case may be, but you still have to put in the work. You still have to put in the time. You still have to put in the blood, sweat, and tears, right? Which is something that I did, right? Put in that,
Put
lost
in the work.
money. I put in the time and I still put in the time, right? I'm not saying that I'm the best trader. I mean, that's never going to be me, but I would.
You're just a better trader than yesterday, right? And that is your progression, right? And going using an athlete, using that analogy, I mean, like trading, trading. I mean, okay, yes, some get lucky. You can't really say there's pure talent in trading, right? But trading is one of those things where, let's say there was such a thing as pure talent. It's one of those things where I would work with the guy that works his ass off getting better. than with the guy who just thinks like, I got this. This is all talent and,
Right.
uh, arrogance, that kind of thing, right? I would take a hard
Exactly.
worker
Yep.
over a presumed talented individual any
Great.
day. Okay, so obviously you've gone through your progressions, and I really want to ask you this because there's a concept that me and my staff talk about where individuals have no pain, right? And so, I come into the community and I'm trying to educate, and obviously, I sort of kind of like parakeet your emotions, right? So if you guys are down and out, I'm down and out too. That's me.
Mhm.
I'm an educator, right? It affects me. Obviously, the time he came to Orlando, we had that sit down in the car. Guys, no, he did not give me a blowjob. We were just sitting in the car and we were talking about his journey, right? And
Correct.
like for me, and as much as I'm like a dick in the community, because I mean, I am the general, I'm also very empathetic. But going back to that, like, do you feel that pain, in fact, is a critical component to your growth as a trader?
Absolutely. Yeah, you definitely I feel that you definitely have to hit I mean I don't, you know, impound this on anybody, but you definitely have to know at least understand that whatever you're doing is not correct or you're whatever you're doing you're not going in the right path. And to
Hmm.
me that was hitting pretty much bottom, rock bottom.
Hmm.
Where I'm to the point where I like, okay, well, you know, I had all these obstacles and things happen to me, challenges. But
Hmm.
instead of me being a victim, I said, okay, well, let me use this as fuel to
Hmm.
what I can do and what I know what I was my creator,
Yeah.
created me to be, and that's, to, learn from others that have been in there. And then that's the conversation that we've had, where, we've kind of shared similar struggles and, and if you learn from others and you can grasp that and obviously not make the same mistakes, then that's where you really start to, I would say, think clearly, right? And that's when said, okay, well, whatever I'm doing is not working out, and I have pressure on me, and I have all these things mounting on me. So I need to think clear and I need to be creative and find a better way for me to get out of this, and enjoy the journey because
Hmm.
I think it's better when nobody wants to go through those bad moments, right? Of hitting, bottom and losing everything, right? Or to the point of losing everything. But I think it's more of like the stepping stone of going back up, right? Like just as much as you can climb a hill, climb a
Hmm.
mountain, just as you
Hmm.
climb up, that's more, once you get to the top, right, you're like, wow, look at this, look at this view, look at this amazing things that I've accomplished. But, you also got to look at it. Okay, I can also come down and also enjoy the same, same amount.
Oh, there you go. There you
Yeah.
go. And I also want to interject really quickly. For those who don't understand, Trade 1348 is not a follow me trading community. It's we provide the education, and we're going to show you what the education does. With his stats, these are real stats. Um, as it looks, you're up $16,000 over 8 days with your prop firm. He's funded with what's that? $50,000 funded. You have 20 accounts. The total with the $2,500 drawdown, so you're $50,000 funded, and you're currently up about 16,000, somewhere around there, right? Which, ironically, you started your journey almost at the exact same time that John Casciola did, and he used 50,000,
Hmm.
right? He used the 50,000 and of his own funds, by the way. But you guys, your performance is rather similar, right? Which means that you both are adhering to the same type of mathematics. But going back to that and the journey and then understanding where you hit rock bottom, this is where I feel like the follow me trading services out there, right? This is where I feel it prohibits the trader from having that feeling or sense of accountability as to why they hit rock bottom because they're following someone else's trades. And so, they never really truly realized they hit rock bottom. In fact, they passed the buck of responsibility to, oh, I was following this guy, I was following that guy. That's why I'm not successful, right? And so I think for anyone who might be on this journey trading you know, you really have to take that responsibility and accountability for yourself, and just go ahead and like learn it, you know. And so I'm very, very proud of him because he would never have to join a follow me Discord community. He would never have to hear from another analyst or read another Motley Fool article. He's here and he's like, I know what I'm looking at. This is my plan. This is my trade. And this is how I'm going to make money. Do you agree with that? Do you feel that, you know, those services out there sort of kind of like numb that sense of responsibility for a trader as they go through their journey in developing their skill set as a trader?
Oh yeah, absolutely. That's what that was kind of the first group that I was a part of.
Oh, there
Is
you go. So I'm not your first, but I'm your last.
and let's keep it that way.
That's all that matters, baby. We keep it that way. I was
Exactly.
last.
Exactly. Um, yeah, so and I think that we kind of get into that. It's one thing to help each other, right? Like how I still participate in all your videos and your streams that you do, right? Because you've put in the work, you've put in the time, and even though you're wrong at times, but you at least explain like, hey, this is, as long as you manage your risk, there's nothing else to it, right? So, but at least you're very transparent and clear about it. You're like, look, this is not financial advice, this is not follow me, this is just me reading what the market has done, right? And you always tell the same thing, like, hey, only learn one or two tickers that you want to trade, right? And you feel comfortable with. And that's all I did, really. I've only stuck to one ticker because I feel that, the more you start bouncing around, that's where you kind of get drawn into that shiny carrot, whether it could be gold, it could be uh, oil, it could be whatever.
Yeah.
I don't I don't want to, it could run up 100 points. If ES only gives me, $1 that move that day, I know that I can make money that day.
100%, 100%. So what I want to do is I want to go to your stats here. I have your stats pulled up. All right, guys. So let's look at these stats here, and let me just break this down for you. So currently up 912. This is not accurate. Minus fees, it's closer to like what, 850, 860?
Yeah, 860.
Okay, so minus fees. All right. For the record, we are using TradeZella, so we're verifying his trades using a third party. Your win rate at 72%, which is phenomenal. Now, this here actually drives the point home about base hits, right? And I think you as an athlete, you understand this as well, that if I'm going to kick a soccer, you play soccer, right?
Correct. Hmm.
Right? Easier to pass the ball if the athlete's a shorter distance away, right? And I'm assuming the further he is away, now you got to deal with accuracy issues, wind, other players intercepting, that type of thing. So what you're doing is you're literally playing those easy, passes that I love. And with this, it's allowing him a 72% win rate. His profit factor, guys, anything above 1 is a profitable trading system. He's at 1.94. He's utilizing trade designs, EMAs, 1348, et cetera, et cetera. Now, this here is probably the most important thing for me, right? Because I'm sure in every single one of these days, and correct me if I'm wrong, I'm sure in every single one of those days you found yourself red, but you were able to end the day green. But in that, there was no panic settling in. Why do you think that was?
So I guess this is kind of like the strategy that I had to paint for myself. And again, this is where you can start thinking clear, right? Because so just to kind of recap, like how prop firms work, right? Prop firm works where, and I fell in the same trap too as previously with the options, right? They
Mhm,
give you all these numbers, high amount numbers that you get seduced.
mhm,
100, 150, whatever, like it's all facade, right? And then they start limiting you by different. They start putting obstacles, right? In the middle. Some, oh, you can only make X amount a day. Some put where you can only end the day here. So there's a lot of obstacles because they know that it's a it's more of a gambling mentality. So I had to kind of dissect a little bit of everything just to kind of give people a perspective here because when you look at it, right, everybody's gonna be like, oh man, $50, like that's trash, right? Like that's like why even wasting your time, right? But here's the thing, $50 a day times 20 accounts, it's $1,100. Now you tell me who has the higher risk, right? Somebody that's playing 2, 3, 5 contracts to make $1,100, or like myself that I can manage playing one contract, that's only $1 move, right? 1 point move, I should say. So that's how I had to look at it and say, I can manage $50
Hmm.
risk much
Yes.
tighter than, somebody trying to make $1,000. So for me, all I need to do is hit $50 for me to make $1,100 a day. Somebody needs to hit that 5 points, right? To make on one contract,
Hmm.
100, yeah, five points to make, $1,000 a day on one contract. So I needed to come to a game plan of say, hey, you know what? If I compound this day by day,
Hmm.
this is all this is all I need. All I need is $50 a day. I don't need to be in the market no more than 5 minutes. I'm done. And you
Yeah,
can see,
that's key.
you can see my trades that I'm, more than two and a
And
half
we're going to
minutes or
jump into
yeah,
that. I'll be able to see your entries and your exits. We're going to jump in that. But really, what you're also highlighting is that even though for those who are jumping into like prop firms, right? They go ahead and say, well, you have $150,000 funded, and that's the wrong way of looking at it, right? With Top Step, you have $4,500 drawdown on 150,000, so you're really only 4,500 funded, right? With Apex, which you're using, you're $2,500 trailing drawdown, so when you multiply that over 10, you do have a $50,000 account. Apex will say you have $50,000,
right. Yeah.
right? But you really don't, right? And their sales pitches were helping individuals who are undercapitalized. Now, I'm going to be frank, I'm going to be honest, guys. The more money you have in your portfolio, the easier it is to make money. It's just 1% of 100K is $1,000. And all you need is a 1% move. In trading futures, all that is a 1-to-1. So you just need a 1 hour on the day and you're making meaningful money, right? Um, but when someone's undercapitalized, and this is the type of person they take advantage of, it's okay, well, how do I maximize this? How do I make the most money? And then you're over leveraged. And that's why so many people blow up their accounts. And so what you've done is you've artificially created a $50,000 account over 20, and therefore it's allowing you to manage your risk super tight, right? And it's allowed you to say, all right, well, I just need 1 point, right? Um, but then you really think about it, that's 20 points
Right.
because duplicating. So that's 20 points. And 20 points in one trade. Let's say you got a $50,000 account. 20 points is $1,000 if you're risking only 500, right? So the math is there. And all you're doing is playing to math, which is great. Um, let's get into something here. This is what I want to see here. Now, this day here, we got $150 on 3 trades. Wednesday, that's
Today.
today,
Hmm.
8 trades, $138. Now, let's go ahead and look at this. Um, let's see. There was an 11 o'clock trade. So you stood away from early morning hours. I mean, that's what you
Correct.
did?
Correct. Hmm.
Okay. Um, so you made 62 here, and then you were getting beat up here. This is where you were hitting your stop right
Correct.
here.
Hmm.
Okay. So let's go ahead and look at this. This starts at 11:17. So let's go ahead and click that. And you went short, and then it stopped you out. Now, what was your thesis for going short on this one?
What was that time? 11.
11.17. You went short at 11.17.
Yeah, the RSI was starting to point down. There was a trade design going down as well on the 5 minute,
Okay.
but I believe it was not matured. It was already breaking the 13.
Okay. Let me pull this up here.
Yeah,
We're going to look
okay.
at this in ES here. All right, guys, I'm going to show my screen here. This was 11.17.
17.
So your entry didn't wait for a candle close. All right, I see what happened here. All right, guys, let's take a look here. And this is something that he can obviously learn from, but more importantly, this is what the market does, right? And this is why risk management is so important, because thesis was valid. You got strength to the downside, and of course, you know, if you didn't get stopped out, you would have found yourself profitable somewhere down here.
Hmm.
But he's not here to make the most money. He's here to manage his risk. So, okay, now let's go back to this. So you got stopped out. You re-entered. Going through that series of trades, you re-entered, and this was a trade up north. So if we go back to your data here, let's this one. All right, so we're gonna go back. Let's find this trade. Change this to the 5. Wait a minute. Okay, so that's actually another question. Are you entering on the 1, and then just following the trend of the 5? How are you playing this for those who want to know?
Yeah, correct. So I look at the overall picture on the 5, and then I use the 1 for a more granular entry.
Okay. All right. And so let's go to the next trade here, and this here. Um, okay, so it looks like you played it down one more time here at 11:20 because it got stopped out. So you were trading the trade design. You were insisting that it was going to go down based on your indicators, correct?
Correct.
Okay. And then it got stopped out here. So that was $100 loss. Not mad at it, right? So if we go back to what we're seeing here, let's mark this candle. That's 11:20. Let's get to 11:20 here. That's here. Okay, great. It went down, it came right back up. I could see. Actually, were you aware of what was happening with the
Yeah,
band?
correct. I realized that after my second one, so that's why I waited till the band started to develop again to the red side. Yeah,
Ah,
mhm,
okay, all right. Hey, awesome. So that was a user error here, but it doesn't matter. You're going to lose. You're winning 72% of the time, so it really doesn't matter. You had a user error here, and that's fine. That is fine.
correct.
Let's go back to
Yeah, because
your next trade.
it flicked from the downside trade design to the upside, and then finally gave out again.
Okay. Yeah, so that's 11:24. You entered at 11:24. All right. So I think what's okay, this is just my diagnosis here. What was happening here was you were getting beat up because the candles weren't closing. That's all that was. Okay, you were getting beat up because the candles weren't closing. That's fine. The 5 minute, if we allowed for those closes at the 5 minute, you probably would have realized, like, okay, I'll sit on my hand a little more, right?
Okay.
Not going to beat
Mhm.
you up. It happens. It just happens. Okay. So let's go back to basically this was $100 loss here. Again, guys, he is managing his risk super tight. And the reason why you're supposed to manage your risk super tight is because it's easier to recover. So, like, for instance, let's say you lost 10% on a trade. To actually recover, you need 11%. And if you lose like 30% of your trade, to recover something like 37%, 40%. And then, like, when you lose 50% on a trade, to recover is a whole 100%, right? So by keeping our risk small, we always keep ourselves within shooting distance of being profitable. And I'm assuming that's part of your game plan and what you're doing here.
Correct.
Perfect. Perfect. Okay, so that was a losing trade here. Let's get to the next trade. This is where he was profitable. So let's see here. What I'm seeing you went long and then you added to your position. Is that what happened here?
Yes. Mhm.
Okay. Now let's go ahead and look at this on the charts. This is going to be about the 1125 to 1130 candle on ES. Um, Not bad here. Okay. So back to trading view here. And we have, that was this candle. So you came in on this candle. That was a trade design.
Correct.
Now, here's my question to you, right? Was the 24 your reason for exiting the trade?
Yes, correct. I saw it once I hit the 24, I was like, all right, let me grab my my $100 because I know that now I'm closer to,
Mm-hmm.
to my break even. So
Right.
that's why I added to my position because I knew I only had a short window.
Okay.
So that's why I
Okay.
added a second contract, but I knew that I my risk very tight.
Okay. Now I'm not going to go ahead and jump into the next trade just yet. What I'm going to do is I'm going to bring us back to the chart. And when you took profit here, oftentimes you take the profit, you see what the next candle does. It sort of kind of gives you clarity for this entry here. So I'm going to ask you, did you enter this trade to the downside after you got the rejection off the 24?
Let me look at.
Oh, no, 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 don't look. We're gonna
Oh.
pull it up here. But I'm just saying this is the benefit of, I don't want to call it, well, it is scalping. There's no other way to call it. It's
Hmm.
scalping, right? But the thing is you've heard me say lose fast so you can win faster. And then once you win, you can recalibrate, right? So I'm looking at this and I'm like, he took his profit at the 24 because when you're trading against DMAs, it is less about where do I put my stop? It's more about where's my target because I don't want to get beat up by it, right? We have that example here with the 24. We have that example here with the 48, right?
Hmm.
It comes on up, boom, rejection. Comes on up, boom, rejection. Here, boom, rejection. Here, 48, boom, rejection. And you're seeing that, right? So when you're trading against the trend, these are things that you have to be mindful of where the EMAs, in fact, act as very strong levels. So you nailed it here. Let's go ahead and look at the next trade. By the way, you're doing awesome. You're doing awesome, and I hope, in as much as we're recording this for others, I really hope that this is also benefiting you as well because you know, um, we're encouraging a solid trading plan here. So next trade of 125, where did that happen? You son of a bitch, you did it. You took it. And then it obviously, guys, this here, we're going to go back to that candle really quickly. But once again, when you can go ahead and just take that profit and then look at the market for what it is and trust your system and your indicators, right? He did not chase a candle. He had context. He had context of a rejection off the 24. He had the context of his ribbon. He had a context of a trade design. He had all of those things, which prompted your response, right? Now, before I continue, I need to ask you something. Okay. This is really, really important. How much of your trading is based on speculation now as opposed to reacting?
It's all reaction. I'm not speculating. I mean, obviously today was, it was a data day. I usually don't like
Mhm.
trading data days because of the fact that it's very volatile, but I knew that what was being presented to me, I had the opportunity to get back green. So
Mhm.
I wasn't speculating like, oh yes, it's gonna go up, oh it's gonna go down. Like it was whatever was being presented to me, that's what I was playing. Like I and keeping my risk tight. Even if whatever thousand Fedman, because there's always like thousand Feds speaking, right? Like I was not concerned because I knew that I had the correct. I had that short window there of at least 5 minutes to get back into the game, and that's exactly what I did.
All right. And so it looks like here you secured profit, then you re-entered. So you can follow along with this trend here.
Hmm.
Okay. And then let's see. Then it brings us to Noon. Okay, so that's a 12:35 candle. Let's go to let's go to the chart here. So, guys, this is where he made his money, right? It was he secured profit here. He waited for the setup here, right? That was that 11:37 entry. You took profit, you re-entered, and then you took profit here. Now we got to go to the 12 o'clock instance. Uh, let's see here, 12:35. Okay, so 12:35 is right here, and you played it right into the EMA. Now, what we're going to do is we're going to bring this level here. This is going to act as resistance. Now, I'm going to ask you, when you took this trade, were you targeting that EMA as well? Really quickly, was that a scalp for you?
I was targeting the EMA, but I also saw the ribbon developing.
Mm-hmm.
So I knew that I didn't have, I had the option of either that ribbon, right,
Mm-hmm.
or the 48, which was the next level. But I knew that, between the 24 and the 48, there was going to be a gap because the ribbon was developing to the upside.
Correct. Now I have to ask you, if you were not contending with trailing drawdown, would you have allowed yourself to absorb this candle to the downside and pretty much allow yourself to ride it all the way up to the 48?
That's correct. But because of the fact that I'm still, but
Yeah.
even so, for me, the trailing, like I guess it's kind of like a double-sided coin, right? Because
Hmm.
or double-edged sword, however you want to call it. Like to me, I don't really look at the trailing. Like I ignore that because that's just noise, and that's just gonna
Hmm.
mess with you psychologically. I knew that I only needed $50 a day to be on schedule for my port.
Hmm.
So when I
Hmm.
saw $62, I said, okay, I'm taking $62 and that's it. It doesn't sound sexy, but it does once you add up, you know, like no, I mean, if you think about it, right? But that's what people are gonna, think or speculate, and to me, it doesn't really matter because, that's the difference between somebody that has the long-term mindset versus somebody that wants the short-term. Yes, I could have wrote in it, but I don't know what could have happened. For me, is as I end up the day green, that's good, right? Especially being down $300 or close to almost $300. So if I think about it, I made $350 today, right?
Hmm.
That's how I perceive it. Like, okay, I made mistakes, and I was able to get out, but I ended up, green. That's it. Walk away.
Yeah. And so I guess one of the most important aspects about a trader is, or one of the most important skills that you can develop as a trader is accepting when you're wrong. Let's talk about that now. You accepting you're wrong now versus you accepting you're wrong, way back when, because you did burn through $100,000, right? So, what do you feel biggest change for you? And if somebody asked you, Anthony, I'm struggling with holding my losers too long, what bit of advice would you give them?
I think the biggest thing is playing small allows you more time for you to think clear, right? And of course, we all have goals, right? Everybody's got different financial obligations day by day. And
Hmm.
to me, I knew that I had to play small, but I knew if I could play small, I could end up winning big, right? And
Hmm.
that's all it really mattered to me was if you kind of break it down, right? Where if your goal, like let's say, is $200 to $300 a day,
Hmm.
right? Which is, what about everybody kind of wants to kind of do in the market, if whether it's full time or part time. But to me, it was like, okay, well, 200 to 300 is a little bit more than what the market's going to give you. So if you understand that you take it, like it's like kind of like Pac-Man, right? Like the
Hmm.
game Pac-Man, right? Pac-Man, you eat one little, I guess, circle thing or whatever, one bite at a time, right?
Hmm.
And then you start gaining the points. That's how I looked at it, as opposed to in the past, what I would have done was oversized, right? Because now I'm against, I'm in a much deeper position. Like I said, you have to, work as twice as hard now to get out of the hole. And just, really, understand where your emotions are, and just trust in yourself. Like it doesn't really take too much. I mean, it's gonna take some, because I've, like I guess that this part wasn't even told too. Like I've gotten, funded accounts before, where, but I was like, well, I can't really reach my goal because I'm doing this like full time, right? This is like my livelihood. Like this is not a
Mhm.
joke to me anymore. Like this is not toying around. Like this is not, I'm not playing games. Like this is, I'm training with to be in the major leagues, right? So I
Yeah,
knew that I needed to come up with a different strategy. And that strategy means that on one funded account, it's going to be very tough. I need to kind of break it up into smaller chunks. Correct.
correct.
So I blew up many funded accounts because why? Because it's just, I mean, we're humans, right? We're humans. We're gonna fall into kind of the same bad habits if we don't change
Mhm.
something or think, back again to thinking clearly. So that's why for me it was like, hey, you know what? You saw there, like I can manage $100 loss. I know that I can $200 to $300 on a day. It's more feasible, it's more obtainable, and it's
Correct.
easier on yourself. You're not putting so much pressure. But when you're trying to do 1,000, or north of that,
Hmm.
I read somewhere that, on an average, a good trader, that means you're playing with the big league boys. On average, they make $1,000 a day. So if you come in here and say, yeah, I make $5,000 a day, well, good for you. The market blessed you, but that's not every day, right?
Hmm.
Unless you have the port to support port size or your portfolio, not not being poor, but your portfolio to support that. So I needed to come up with a different game plan. And that's why I said, well, I can manage my risk much quicker and tighter. How you always teach us, like, hey, lose quick, get out, reset, find that entry, and you will definitely get back into the groove of things.
Exactly. Now I'm gonna actually highlight something because it's the mathematics that you're playing and you're actually exceeding the mathematics here, right? So let's go ahead and let's look at these numbers here, right? So this is a $2,500 drawdown from Apex,
Hmm.
right? And when you're compounding 1% daily, you quickly realize that you're only needing to make $25 for the most part. All the way. You're not even looking at $100 day until August, right?
Right, right.
You're not even looking to, and that's $10,000, right? And so then we go ahead and we say, okay, so when are we making $500? Well, that's when you're at or about 50,000, right? It's closer to here. That's where you make it $500 a day. Okay.
Hmm.
Now, here's the thing, and this is why we talk about risking 1% to make 1%, or 1R, is that with the 1% compounded, obviously you're scaling. This is assuming one PA account. You still turn 2,500 into 91,958, right? Or 94,448. And this is with one.
Right.
Okay. Now you have 20. So that means you stand a chance for 1.8 to 2 million, right? Playing your play. Then let's go to your stats really quick because now this is really going to open your eyes. Boys and girls, you got to understand that these values are based on one PA account, right? You use a group trader with TradeAbate, correct?
That's correct.
Yes. And what I'm seeing here is that's not 4% compound. That's not 1% compounded. That's 4 to 5% compounded, right? Uh, this is about 5%, 5%. This is 2%. This is going to be about 3, right? This is going to be about 4%, 4%. This is going to be closer to about, what, 6. It's closer to 5. So when we think about this in numbers, and he has said that like $50 doesn't sound sexy or $100 doesn't sound sexy. But when you think about it in terms of percentages, it's sexy as hell. It's
Right.
the long term as long as you remain consistent. So in my mind, you're performing at a clip that's far greater than your expected baseline performance. You are exceeding it. So, we're talking about 1% a day. You're doing 3, 4, 5% a day. And guys, that is what this looks like. And unfortunately, for those who sign up for these prop firms, they want to go ahead and make the 10,000, 20,000, the 30,000, whatever that number is, and they don't look at it from a percentage perspective. So Anthony, you knowing this and you seeing this and then having that benchmark where you should only be making $25 a day, right?
Yeah.
Just think about that for a second. You should only
Yeah.
be making $25 a day.
Right.
How much does that improve the way you feel right now? How much does that validate that what you're doing right now is the right thing? But more importantly, like you never have to question whether you're a good trader or not because your stats are saying you are, you see. And that's the problem. A lot of people coming into trading, they don't know where to create their benchmark. Their benchmark is in their P&L.
Right.
They don't journal, they don't get the data, and then they don't have anything to compare it to meaningfully. It's all about dollar amounts, right? And guys, these dollar amounts don't look sexy at all. But what I'm seeing is 3, 4%. Bro, show me 4% compounding. Let me show you what 4% compounding looks like, right? Because this is something you're doing. Now, of course, as your account gets bigger, it's not sustainable. Why? Because you end up becoming the candle, right? So you can't have infinite growth. Like I shared with you, Hot Potato went ahead and put up a candle. He was like, Gabe, you were the whole volume on the candle when I entered with 1,000
Right.
contracts. I moved the market there, bro. I'm lucky I was able to get out, right?
Right.
Because things just kept on moving. So I was able to sell off. But let's go ahead and look at this. So what does this look like? 2% compounded, right? We go ahead and do this. Now this changes everything. 2,500 at 2% compounded is over $3 million in a year. Now, what does that haul look like? Well, that haul is $50, 51, 52, 53, 54. You see what's going on here? You're
Hmm.
not even making $100 until you're, you know, damn near 100% your your initial principal amount, right? And so therefore, because as you're growing and your portfolio scaling, you're still playing with the exact same percentage on risk with the exact same percentage on return. And the portfolio just grows and grows astronomically. So right now, I'm saying to myself, well, fuck, dude, if you haven't realized it, you've literally put yourself in a position to make 60 million in over a year, in a year's time, right? And then we have to go ahead. Yeah, we're not going to say that. Yeah. It's all those chicks in South Florida. They're gonna be like, "Oh my God, Anthony, you paying for my PPL, baby?" All right.
Right.
So, but now let's just say, right, that's peak performance. $60 million is peak performance. All you have to do is perform a tenth of that, and you're a multimillionaire, right? Guys, we have to put everything in perspective. This is why we have these rules in place. This is why we have Longevity Club, because my job is to coach him through his mindset, right? He understands why he's entering a trade, why he's exiting the trade. He understands, okay, this is my risk. This is where I need to be in order to be able to recover on the next trade. He understands this and he remains unwavered. Even if, let's say, you lost 1% on the day, let's just say, and you called it quits, you're so far ahead of the game that it doesn't affect you. You see, and I think this is really, really, really important. Now let's go ahead and dig in a little deeper. I want to go into. We're going to get into some insights here. Okay, we're going to go into some reports. Okay, in this report here, there's a number that I looked at immediately that tells me all you're going to really need is 2 trades a day and you're well on your way. So we saw what $2,500 right at 2%
Mhm.
does as it scales. Okay, bro. Let's do this, guys. Your trade expectancy is positive at $31.47. So what that's telling me is that for every trade you make, that's what you're expected to profit on average for your trades,
Hmm.
right? This is telling me that you can mitigate your risk even more with less trades because you have a high expectancy on a trade. Now, again, for those who are watching and you're thinking, wait a minute, that's just $31 relative to his port size. That is amazing. Can't even get 1% on a fucking savings account here in the United States. So it's just, you just can't, right? So that's your trade expectancy. This is great. Um, we look at your average daily volume. That's about 4 contracts on the day. That's your average volume.
Hmm.
Okay. Your average hold time on all trades is 2 minutes. So you're quick, right? Um, Obviously, when you pass trailing threshold, I would imagine this number would skew higher, right? Unless you're just a 2 minute man. You got to ask the ladies about that, right?
Hey,
Okay.
at least not a 1 minute, you know. So.
All right. You got 8 winning days. That is the most important part is win the day. Okay. And then what we see here is just consistency. And I bullshit you not. I did a follow-up with John Casciola and his his angle, right? Damn near same thing. It was identical. I would advise that you reach out to him in the community
Okay.
because that is very, very similar. A nice, strong trend with a healthy degree. Guys, this is about a 45-degree trend. It's not a 90-degree trend. It's not a 70-degree trend. This is just nice and steady, not overly aggressive, just nice and steady. And I love it. It's, you got a lot to be proud of yourself here, man. You got a lot to be proud of yourself here. We look at your largest loss is only $212. It happens.
Yep.
It happens, right? Let's see, your largest win. You had the most consecutive wins, 8 in a row. Most consecutive losses, 3 in a row. Today you had 2 in a row, right?
Hmm.
Which is telling me, okay, you're consistent, right? You're consistent. Let's look at, okay, your average winning trade is 89.88, right? So you got a reverse 2 to 1 here still, but that just comes with the territory of having that trailing threshold because not only are you worried about a negative P&L, but you're also worried about how you hit 90. If you don't take that profit, you go down 90 and then you go down 200. That's actually a $300 drawdown.
Correct. Correct.
So I see why you're doing it that way. Again, once you pass it, then my job in working with you is getting the P&L reversed. For what it is right now and what you're doing, it's per
Correct.
100%. Okay.
Hmm.
And let's see.
Which is kind of why I stated that, for me to kind of block out that noise of trailing stop, like I need to do the quick base hits. So
mhm.
that way you're not using that, that's not an additional psychological factor in your, because as much as you want it not to screw you, like screw with your psyche, but it does, right? That's how
Mhm,
the prop firms get you to oversize, right? Because now you're down 300 plus, you should have taken the 90. Now you're down 390, so it's like they just make a, that's how they know how to compound the loss factor on you.
mhm, mhm. Now I want to bring up something because we had this conversation some time ago. Previously, you were trading like NQs and you were doing that stuff, or what were you doing?
No, I know you suggested what was it? I can't remember but I've always stuck, even when I was doing, well, no, I shouldn't say that because options, I was all over the place. I was Nvidia, Tesla, Microsoft, Apple, but with futures, I kind of wanted to just stick to one, which was the ES. Um, because I know you mentioned a few times like, hey, NQ is not the best ticker to go after when you're trying to when you're trying to make home and sorry when you're trying to do base hits, that's more for season. So I said, okay, well, I'm only going to stick with ES, and that's all I've been sticking with and learning ES like it's my significant other, I mean, I can't get her right 100% of the time, but when she does, give out, she pays.
Yeah. Yeah, and that's the thing with the S and that, excuse me, NQ, and a lot of traders, again, they come in and they're like, well, I make the most money on NQ, or I make the most money with CL or gold, and
Right.
they're everywhere, and they're just not understanding that NQ's a widow maker. It
Yep.
just is, right? And as much as it moves is as much as it loses, right? And for me, I don't think that any person trading a prop firm or beginning their career as a trader should expose themselves to that type of volatility. You're just not ready.
Right.
But more importantly, when we go and we look at your stats here, guys, he's able to do this all 100% with ES. There's no reason we could see the instrument that you're trading. You stick with ES 100%, which is so important. Why is that important? Because I've done one-on-ones with traders where they go ahead and they lose on ES, right? And they lose a little bit too much. So you know what they do? They go to NQ because they're thinking like, okay, well, I go to NQ, I just need a quick hit and I make it all back, right? And I see this as a common happening, right? More
Hmm.
importantly, NQ is a bit too large for any and all of these prop firms, right? So I like it, and I think you can see it for yourself. It's you have the discipline, you have the plan now, you have the you have the data to support you, right? And all it's going to do is lend itself to you. Remember we talked about the feedback loop where, psychology, mechanics, and one feeds into another, right? If the mechanics aren't working, then your psychology doesn't work. If your psychology is not working, the mechanics not going to work. And what you see here with this is everything is pretty much a well-looped machine, right? You like your women lubed?
Oh yeah. I mean, there's no pleasure in
I caught him off guard here. He was like,
there's no pleasure in it dry.
so,
So,
Anthony, I want to give you a round of applause because going through your data, there's all there is for me to keep on rooting for you and supporting this, right? Of course, when you come to me and say, well, I passed trailing threshold, then obviously we got a little more wiggle room to, yeah, build upon. The only thing that you're running shy of is your risk reward, right?
mhm.
But it's interesting, guys. Remember, we talk about win the day, not the trade, right? And when it's all about ours. So even though on a per trade level, right, your risk to reward at the trade level, what we saw with the data is actually skewed, where you're making $89 versus losing 200. Your total is actually a positive 2 to 1,
So it
right?
kind of goes back again to that analogy that I was saying, like sports, right? Like every super athlete, you can, an example, like, uh, actually you use this analogy. The Derek, remember we had that conversation, like, oh, so you're not a Barry Bonds, you're a Derek Jeter, right? I'm like, yeah,
Yeah,
I'm sexy looking like him. So, but no, like let's say like LeBron James or Steph Curry, right? You know, just to take it in basketball, they may not be the highest scoring guy that game, but they start to understand and adapt. Like, hey guys, I'm not 100%. I'm off. I'm whatever. I'm just gonna feed it to you. I'm gonna pass it to you, right? And but the end goal is to win the game, right? So that's really what it boils down to, and that's why I said, like, I know a lot of people in, not just this community, but all over, they all want something handed out. But like I talked to Gabe and I told him, hey man, look, I'm really putting myself here in a pinch, and but I believe that if we work together, I know that I can get that information, what you have of all these years, right? So I kind of really understood, like, hey, you know what? I don't want to be sitting here, trying to figure it out when I'm 60 years old, when you've already gone through that. I'm not saying you're 60, right? But I'm saying that, right, you have the data, you have the experience, you have that. And the reason why I say this is, right, because a lot of people are like, yeah, but this is expensive, that's expensive. But the way I see it is, you're either going to pay for it now or you're going to pay for it down the road.
Hmm.
So this is not me like trying to say, like, like, I'm not getting compensated by Trade 1348. I'm not getting, any type of money. I pay just as much as, everybody else. But what you have to understand is that if you're really serious about this, you have to invest in yourself, and you have to invest with somebody that's been through the ropes,
100%.
and I told Gabe, I'm like, Gabe, man, look, I'm really putting myself in a pinch here, but I believe in putting myself into further depth. And we had this conversation, right? Like, I believe putting myself into further depth. Like, I don't have nothing to hide. Like, I put this on a credit card, but I'm like, the only way I'm going to be able to learn from Gabe is by being part of the longevity club.
Hmm.
And that's the only way I'm going to be able to download that information, whatever he has there, to me. But I know that, like, I'm going to
Hmm.
get out of this if I just stick to the plan. And, when we had that conversation, you're like, look, don't think in numbers, think in percentages, it'll change your mindset. So that's why I say, like, a lot of people complain and this and that, but, you have to put in the work, and you have to also take a leap of faith, right? Nothing's going to come to you, in a silver platter. Like, you didn't give me anything for
100%.
free. You didn't give me anything for, like,
No, no, nothing for free. Nothing for free. Uh, we're going to go ahead and wrap this up because the market's going to close in about 15 minutes. But I want to be able to highlight, like, while I'm hanging out with you the whole time, remember we talked about an NQ trade that I was actually down and I just held through it. This is obviously in the longevity club. As you're working with me, and then we passed that trailing threshold. These are some of the things that you'll be allowed to do, right? And for me, one of the biggest things that I stay true to is my plan and my thesis, right? And so as it stands right now, the up 4 grand, right? Trade is small,
mhm.
but you're up 4 grand, right? And the thesis here is rather simple. You have a trade designed to the upside, strength to the upside. And then, of course, when we use trend thrust here, we get, let's get this up here. You'll see, and right there, right? So I got my
Mhm.
trend thrust here. We had confluences. We have multiple confluences. So what am I targeting? I'm actually targeting the next DMA. That's all I'm targeting. And when you get to that point, and this is why I'm going to coach you through all of this, when you get to that point, you afford yourself the ability to enter a trade like this and let it go, right? Of course, we're still managing the risk. We would have our stop right here, right?
Yep.
So I would go ahead, place my stop right here, and then just let it go, right? Because you're losing nothing on the trade, right? You're losing nothing on a trade. You have a trade plan. And I think for a lot of traders, and tell me I'm wrong here, for a lot of traders, you get so caught up in the candle that you just really lose sight of what the plan truly is. Um, and so, yeah, I'm just trading to my plan here, up 5,600 bucks. And this is going to be you. And that's why I'm so excited, because this is going to be you. Ideally, what I would hope for is that as you're taking your payouts from Apex, you're still investing in yourself. Obviously, pay back whatever you owe, but then go ahead and say, okay, now I'm going to take these funds and put it into a real account, because you also have to make it real. Right. And this is something that I shared with John Cashola. He was using his own monies, and yeah, he made 17,000. Again, very equivalent to you. And his birthday was coming up, and the advice I gave him was make it real. Take some money out and enjoy it, because you deserve it. Okay. And so you're about, I want to say, 22 trading days from making it real. Passing a trailing threshold where you could take your first withdrawal and make it real. And that is so important. That is so important. And guys, no, I don't want to jinx his performance. I have so much faith in him that he knows what he's doing. And as long as, dude, you only need $25. You're in a trade, man.
Yeah.
And you see you're up, you see you're up $100, right? You just go ahead and say, hey, I'm gonna bring this up to $25 right here. So whatever
Yeah.
happens,
Yep.
right? That is such a privilege, right? Especially when you pass the trailing drawdown, to have that privilege to know, like, bro, all I need is $25. All right, yeah, you're 100.
Yep.
I'm gonna leave it here.
Yep.
If you stop me
Exactly.
out at $25, I'm still
That's
making 500 on a
amazing.
day just chilling, right?
Exactly.
Uh, Right. And again, it's about those percentages. Hell, you could say, okay, well, $50, right? I'm making $1,000. You have that privilege that even when you underperform, you're still kicking ass.
Absolutely. And then if you do make $1,000, then you'd be making 20 grand a day. So if the
Well,
market,
I'm saying like if it was $50 though, so you
right.
got it's $25, at the minimum that you would have to secure to
No,
have
no,
a
yeah, I understand. But what
yep,
I'm saying, if the play develop and what I'm saying is on one contract, you can
maybe a
easily
thousand.
you can make 1,000 on one contract.
That's only 20 points with the S, right? 10 points with the S makes you 500. Oh shit. That's $100,000 day. No. Times 10, that's a $10,000 day.
No, times 20, be 20 grand, 100 grand a week.
Yeah. Yeah.
If you're doing
Good
yeah.
shit, man. Look at that smile on his face, everybody. I hope you enjoyed this video. Thank you so much for your time and actually showing us. That's pressure all on its own, right? But yeah, I think it's not just me. I'm just a teacher, but if you can motivate your peers as well, it just makes my job a lot easier as a teacher, right? So all right, brother. I'm gonna see you in a couple of weeks. You
Thank
set
you,
it up in
thank
the
you.
calendar, man.
All right,
Yeah.
appreciate it.
Round of applause for this guy right here, right? He's gonna go ahead and he's not only good looking, but he's soon to be rich, and that makes him unstoppable. He's the kind of guy I hate in South Florida. I fucking hate those kind of guys. He's just rich and good looking too.
No, I'm gonna be laying low, man. Yeah,
You want to lay low, move to Arkansas.
I
'Cause-
maybe Montana.
there you go. Lay low with the fucking cows over there, man.
Yep, yep.
Yeah. All
All right,
right,
brother.
brother.
Thank you for everything. Okay. Take
Take it
care.
easy, guys. And you take it easy too.
Thank you.
Peace.